Good afternoon, everybody. It's Carlette Mitchell, your 251 Trusted Realtor, and today is Topic Tuesday. So I came on really quick to give you guys a topic for this Tuesday, which today's topic is going to be understanding your credit. And as we all know, credit is very important in life, and it is equally as important when it comes to obtaining a mortgage. So I jotted down a couple tips I want to run by you guys very quickly when it comes to understanding your credit to help you guide you along the process, of understanding your credit to help you become a homeowner, especially if you're looking to become a homeowner in the next 6 to 12 months. Now's the time to really dig into your credit, understand your credit, review your credit, and get a hold of your credit. So the first one is going to be your payment history. 35% of your credit score is determined by your payment history. So it is very, very important to pay your debts on time. And a tip I always like to give out is to find out, especially when it comes to credit cards, is to find out your statement closing date and pay half of your balance before your statement closing date, and then pay the next half of your balance on your due date, because whatever your balance is on that statement closing date, that's what reports to the credit bureau. So if you can pay half of your balance before your statement closing date and then pay the other half on your due date, you're tricking the system to make it seem like you paid two payments. So very good tip there. At least it has worked for me when it comes to credit. The next is going to be the amounts owed. The amounts owed is very important when it comes to determining your credit as well. So it's always a good idea to keep your balances to or at 30 or below, 30% of your available credit. Managing the amounts you owe versus the amount of available credit. That's what that is. So what you want to do is keep your balances to 30% or below 30% when it comes to the amounts you owe. The next is going to be the length of your credit history. A lot of consumers go wrong when it comes to the length of your credit history. What we try to do when it comes to cleaning up your credit, we try to go out there and delete items off of our credit or close accounts. But actually, this can be a bad thing. What you want to do is actually just try to pay off the debts, because the longer you can prove yourself a responsible account holder, the better. So just don't go out there getting the things deleted off your credit and closing credit accounts, because that does. And then, however, opening a bunch of new accounts can greatly affect your credit in a negative way. So don't go out there and just open a whole bunch of new accounts as well. And then the next is going to be the type of credits. There are many different types of credit. There's revolving credit. Revolving credit is going to be like credit cards. Then there's going to be installment loans. Installment loans are going to be things like student loans, auto loans, etc. And then there's mortgage accounts. So when it comes to the types of credit, that's going to play 10% into your credit score. And it's always a good idea to have a good mix of credit. Once again, like installment loans, revolving loans, and installment credit, revolving credit, and mortgage accounts. So make sure you have a good mix of credit. And then the next is going to be new credit. 10% of your credit score is determined by new credit. What we don't want to do is apply for every credit card we get in the mail, every credit opportunity we get. We don't want to do that, because having a lot of inquiries on your credit and opening up, as I just said, a lot of new credit can greatly affect your credit as well. So you don't want to go out there and do that. When it comes to mortgages, however, what I do want to point out when it comes to mortgage, when shopping for a mortgage, credit inquiries made 30 days prior to the scoring request. So if you put in your application for a pre-approval, or your application for a mortgage, anything 30 days prior is ignored by FICA scoring. Okay, so what that gives credit consumers an opportunity to do is go out and shop for better mortgage rates. I always tell my consumers to go, or my clients or my customers to go out and shop rates. So what it does, once again, it gives you that leeway to go out there and shop for rates without your credit being negatively affected. So once again, when shopping for a mortgage, anything 30 days prior, FICA is going to ignore that when it comes to mortgages. So those are my quick tips on understanding your credit when it comes to mortgages. If you have any questions, any concerns, please, you can inbox me. My number is 251-504-7093. Most definitely, you can give me a call. Once again, I'm Carlette Mitchell. As I say, being an informed buyer is a smart buyer, so make sure you are an informed buyer regardless of what realtor you work with. Make sure you are informed. Make sure that realtor is guiding you every step of the way. And I serve all of Baldwin County. So if you guys are interested in buying or selling in the Baldwin County area, please get in touch with me, 251 Trusted Realtor, Carlette Mitchell. It is Topic Tuesday, understanding your credit. I hope you guys have had an amazing day, and I hope the rest of your day is going to be as amazing as well. Until next week, have a great Tuesday, and see you next week for Topic Tuesday.